We're heading into the middle of the trading day, and the tone right now is cautiously constructive. Pockets of strength in travel and AI, some ongoing worry around the consumer, and a fresh wave of personal finance and policy headlines hitting the tape. I'm Grant Mercer. This is Storm Stock Solutions, and let's bring some clarity to the chaos of today's markets. Since our last update, two upside stories continue to define leadership. According to reporting from MarketWatch, Carnival is still riding a strong earnings wave. The cruise operator's latest report highlighted firm pricing and healthy bookings, and the big headline for equity traders is the return of its dividend. Coming back to a payout after the pandemic-era suspension is a powerful signal that management feels better about cash flow and balance sheet strength. That's supporting not just Carnival, but sentiment across the broader travel and leisure complex. In the growth and AI lane, Nvidia remains a focal point. MarketWatch cites an analyst arguing that Nvidia is unusually cheap relative to the broader chip sector when you look at its history over the past decade. The view is that the stock's current multiple versus peers has rarely been this compressed, and historically that's lined up with strong forward performance. Whether you agree or not, it's feeding a narrative that some of the AI leaders may be consolidating rather than rolling over, and traders are watching that closely as a potential springboard into year-end. On the risk side, the consumer backdrop still looks fragile. Jeffrey Bartash at MarketWatch notes that consumer sentiment sits near record lows, even though spending hasn't completely rolled over. When people say they're miserable but keep swiping, that can support near-term earnings but raises questions about sustainability. For investors, that's an area to handle with care in highly discretionary sectors, anything reliant on confidence rather than necessity. Because if the mood finally matches behavior, you can see a sharp reset in demand. There are also several under-the-radar stories that could matter more over time than they do in the next 10 minutes. Andrew Keshner highlights year-end tax strategies that could make refunds even bigger than Trump promised, emphasizing just how much room there is for households to optimize their tax position before December 31. Beth Pinsker dives into smarter ways to structure charitable giving, suggesting that spreading donations out instead of cramming them in at year-end can be a financial win-win. Those won't move the S&P on their own, but they reinforce a theme. Households are being very tactical about every dollar in a high-cost environment. In travel, Charles Passy reports that airfares fell more than 5% in November, helped in part by the government shutdown's ripple effects. And the question now is how long those deals last. Cheaper tickets can be a tailwind for airlines, travel agencies, and tourism plays if volumes stay strong, but also hint at competitive pressure and capacity shifts inside the sector. On the policy front, Victor Reclatus covers President Trump's announcement of a $1776 warrior dividend for U.S. troops, framed as relief amid ongoing cost-of-living worries, while Jamie Lee notes that the White House is preparing more as drug pricing deals with major pharma companies. Neither headline has shocked markets yet, but healthcare investors will be watching the details of those pricing agreements, and macro-focused traders will be gauging how much more targeted support or stimulus might be coming in 2026. Finally, Philip Van Doren's piece on passing wealth to children sooner rather than later, along with discussion of emerging market opportunities and stories of young traders making outsized gains, underscores another thread. This market is still driven by a mix of long-term wealth planning and high-octane speculation. That's a potent combination for volatility when narratives shift. Into the next hour, I'll be watching whether strength in Carnival and Nvidia can continue to anchor the tape, how sensitive consumer-linked names are to the sour mood, solid spending dynamic, and any concrete details that emerge on drug pricing or new relief measures. We'll bring it all together for you again in our closing bell wrap later today. Remember, this is information and education, not personalized financial advice. As always, I'll be here to keep clarity through the chaos of these markets. On behalf of Storm Stock Solutions, I'm Grant Mercer. Stay sharp, stay steady,